Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, August 8th, 2010. Friday gave the bulls somewhat of a scare early in the morning in terms of when the non-farm payroll numbers came out. We actually gapped down in the markets and then did a fade move, which is when you move opposite the gap, and then came down hard. I don't want to spend too much time in this video talking about intraday day trading stuff. I want to talk more about the state of the markets, but I do want to point something out to you that what happened on Friday, that when the market faded here and it came right up to fill the gap, the clue that it would turn back down and actually move lower after that is simply in the market internals, in the breadth, like I always talk about. Notice that as the market was going up in the first 3 or 4 15-minute bars, the breadth is going down. So this is the amount of volume that's flowing into up stocks versus down stocks, and it's going down even as the futures, spider, whatever, market is doing this, you see? So it's unsustainable. So that's the key there. That's the trick to knowing when it's a fade and when it's not. And you can see here, this is the advanced decline line here in the morning, and you can see here you opened very negative, just by minus 676, and then plunged down to minus 1609. You see that? And yet you're plunging, and yet why is the market going up? You see? So this is just an imbalance that's occurring in the futures, basically. And then once that imbalance is balanced, or whatever you want to call it, it just, the real market takes over, so you fall lower. And then obviously we had this consolidation and went higher. And the fact that we went higher here, that's what I want to focus on in this video. I want to talk to you about the fact that we basically shrugged off a really bad jobs number on Friday morning, 8:30, when that gap down occurred, and then non-farm payrolls were expected to be a loss of 70,000 jobs. It turned out to be minus 131,000 jobs. So that wasn't cool. But notice that the market shrugged it off. That was probably some of the worst news we could get. And yet the market kind of held firm. So I think things are pretty much okay here in the bullish camp. We should continue to grind higher. Let's just run through some of the other majors here. The Qs basically did the same thing. The diamonds look the same, pretty good. Everything seems to be building that shelf where it may want to break higher. The Russell seems to be a weak spot. Notice that on the gap down, you're only here, and you still haven't broken trend at all. And this is more of a downtrending line rather than a flat line like on the diamonds, correct? So be aware that small caps seem to be lagging a bit. That being said, I have some trading ideas here I want to get with you on. Before I do, though, I'll run down some sectors. I want to show you where you kind of should be looking and what you should stay away from. The retailers, let me see here. Where are they on my list? Oh, where are you? RLX. Okay. So retailers have been picking up a little, and they may actually surprise, I think, to the upside. They may continue to grind higher. One of the items on my list is to keep an eye on Walmart, which, notice again, it's that sort of shelf of building pressure that I talk about, where it comes up against resistance and it backs off a little, and then it moves towards resistance again and it stays there. If you look on the weekly, this is somewhat of a congested chart, but I think it moves up to these prior lows. It'll probably be a move here to at least 52.50 in Walmart. Another sector that I've been looking at is, let me see here, metals and mining. This seemed to be like kind of in a congested area, and then all of a sudden gold started getting really strong. It seems like it's holding this area, so I think the metals and mining will continue to be strong. Internets also not yet, probably pushing up into this corner, and then they go a little bit higher. There's a number of sectors as well that I would say to kind of stay away from. Banking is kind of very middling here. The chemicals, where are they? Nope, that's not the one. Chemicals is kind of coming up to a top. I'm still interested also in shorting utilities when they come up to that 420-ish area. This is generally a sector that doesn't break out unless there's congestion here. So you see how this move here, and then it backed off. So this is different. This is probably expected to break out because you have this congestion area. It's breaking out. This isn't coming from a congestion area. This is coming up from the low, as I call it. So the move from 380 to roughly 427-ish here is probably won't be sustained enough to push further. So I'd be looking at a short in utility stocks as this moves up to here. Semiconductors I would stay away from. Notice that this weekly bar here is right in the middle of the prior week's range. So you'll notice I'm going to go through a couple of stocks, and like some of them are retailers. Actually, 3 of them are retailers, which would make sense. A couple general materials, 1 oil stock, and I'll just show you some names, and you'll see that none of them are semiconductors or banks or any of this other stuff that's a little bit tricky. One name that came up on my radar was Urban. I like the weekly hammer. I'm always very enamored of weekly hammers at support. Can you use the word enamored when talking about stocks? I don't know. Enamored is really more of something you'd use for like a loved one or a significant other or something, but whatever, you know. So I kind of dig it when you have weekly hammer here at a trend line support, big support there. That's Urban Outfitters. They're obviously retailers. J. Crew, which is JCG, another retailer. Kind of what I call the ugly pattern that nobody's expecting to break higher, but it does seem that these bodies on the weeklies are small, and that's what I'm kind of focusing on the weekly bars, because remember, this is actually 10 days of trading action. This would obviously have to break higher, though, over 37, so no dice unless you see a print of like 37.05. MasterCard, okay. Forgetting even about the weekly hammer, just looking at the daily here, this is just very typical to me of a chart that everybody thinks is going to go lower, and then it just kind of meanders around, and it has strong support at this big round number at the 200 and the 195, and then it starts acting like this, like it had a very bullish day on Friday, and it seems like it wants to rise up to the descending trend line. And of course the action over the course of the week created this weekly hammer, so you can actually use that as an area of support. Notice that during the course of the week it never went as low as these prior lows, which at the 195 level, where the real strong support is. Another stock that came across my radar is OCR. This is looking like death, and that's actually of interest to me because I like these stocks that kind of look like death on gigantic volume, but then they come down to areas of prior support. So I've got an alert set, and I may be interested in the stock when it moves down somewhere in the realm of these lows here around the $20 area. Nothing left, nothing yet, but again, when I see the gigantic volume, it definitely tells me to set an alert and keep an eye on it. Vulcan Materials is the same thing. This is interesting, I think, for options players. I was thinking of possibly doing like a broken wing butterfly or something like 41, 40, 38 or something. I'm sure I'll get a lot of questions on that, but I actually talked about that in a live chat, I think, right? When I was doing the show for Brad about a month ago or so, I talked about broken wing butterfly. That's possibly a way to play it. I may be looking at put credit at 40. I don't know how much of it there is. It's probably not that much left now. We got 2 weeks into the cycle, but that's pretty much the time you'd want to be selling it. It's also not a bad way to get involved with the stock if you're definitely bullish on the stock and you like it at that level. And for instance, for August, you know you've got expiry coming in 2 weeks. Well, you may just want to sell the 40 calls, or sell the 40 puts outright, and then be thinking that, you know, I want to own the stock at 40, and at least I'm getting a discount on it because I'm going to keep that premium even if I get assigned, and then I'll be long the stock at 40, and my cost basis will be that 40 less what I pulled in premium. So there's an idea there. CRK, Comstock Resources, I think it's called. Look at this monthly. There's really strong support in this area. And then look at the daily. What happened? And again, this is the key. Climactic. It's probably not going lower in the foreseeable future, and it just got overly beat up, and I think everybody that was going to sell was going to sell. So looking at this weekly hammer, this could easily be an idea for a trade up and over this area, which would put it at like 2607, so you got to let it print like 2617 or so to be over it. Two other stocks that I'd like to mention. One, of course, everybody knows, Apple. The only reason I'm mentioning this is it's got a weekly doji, so it's building up some pressure. I think eventually the stock breaks higher if the market breaks higher. McDonald's, which is not a company I'm very enamored with since I'm a vegan, as you know. However, the stock does look good. Wouldn't eat there if you paid me, but stock looks good, right? Looks like it wants to break out. Where she goes next, monthly, look at that. In the clear. People love their fast food, apparently. And IFF, International Fragrances and Flavors, or something like that. I'd love to hear. Let me see here. Go back to the weekly. Yeah, that's the one I wanted there. IFF, perfume company, I believe. Building pressure. Probably had bad numbers or something here, and then lo and behold, push higher. So went up there. So that's pretty much what I'm looking at. Again, market looks pretty bullish here. One last thing I will leave you with is look at the VIX here. I really thought it was going to support here, especially when the market started to back off, and now it looks like it just wants to break lower. So there's still room in here. So if there's room in here, and we might go, you know, to the 20 level or the teens, well, wow, then I guess the market wants to push higher. There doesn't seem like there's much fear out there. So let's take it day by day. Definitely looking more bullish than bearish at this point. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, and of course, as always, from all the good people in Chicago, Illinois, at the one and only Think or Swim, I wish you good trading and good night.